Hi, it's Pascal here. So today is June 26th, and as we are waiting to see if Greece is going to collapse or not, I take some time to make this small video about the supply indicator. What is this supply indicator? First, let's look where it is. You can see that the supply indicator can be found in the real-time section. You click on supply and you get this figure. Okay, what do we see here? So in fact here first you have the volume histogram for the past 2 billion shares that have been traded on Facebook. This is basically the available number of shares, and these took 126 days to turn around. So what we have here first is the price. This is the dollar amount for the price, and then you have these lower boundary, neutral boundary, and upper boundaries. These are the indicators of the active boundaries that capture the trend for Facebook. For example, here we can see that this upper boundary is around $88 and this lower boundary is around 79. Okay, so let's go and see the price pattern. Okay, it's here. Okay, this is the price pattern for Facebook. So what I will do here is to draw a basic trend line here. So we can see that upper part of the trend line is around $89, while if I draw here a line for the lower boundary, you see it's around 79 or 80. So these are the broad lines of your trend. So this is what this shows here. So you know that with this graph you know which volume is trading within the trend. For example, here you have people who have bought above the trend, slightly above. So what happens if the price comes down? So if the price comes down, these people will maybe try to sell some share. They will start cutting losses. So you have two types of supply. So let's go down here. You see you have in green here, this is the profit taking supply. These are the people who want to sell because they have some profits. Usually if you go up to the volume histogram, these are the profit takers. You see these guys who bought around 75, the price is now 86, so they have a tendency to sell to book profits. Then in red here, what you have is the loss cutting supply. The loss cutting supply is really the most important supply, because when you cut your loss, you really don't care about the price, you just sell because you want to cut the loss. When you take profit, you hesitate, you can take time, you are not in a stressful situation, but cutting loss is really what pushes price down. And I have studied that when the supply level increase about 10%, then because of the steepness of this curve, the price tends to fall much faster. So it's good to short stocks which have a supply level higher than 10. But you can see here that you have two types of supply level. It's a little bit like the two types of cholesterol. So here you have the good cholesterol in green, and in red you have the bad cholesterol. So what is important is that your good cholesterol is higher than your bad cholesterol. Otherwise, then there are problems and you start to see price going down.